Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, it's good to be back.
John, Adamira Minerals is up on volume this week. Do we have a discovery at Cook Mountain?
Adamira may indeed have drilled a discovery hole at its SE1 target at the southern end of its Cook Mountain land package in northeast Washington. This target was generated in 2016 as part of this regional airborne magnetic and EM geophysical survey that the company undertook in an effort to both understand what the signatures were of the mined-out deposits in the region and also to see if there were similar targets that had never been addressed by exploration. It was strange that even though various groups had explored the region, nobody had done this big type of regional geophysical survey. And the results were very surprising. There were indeed mag-EM signatures associated with the mined-out deposits, even though they were still mined out. And there were a bunch of them that were scattered all over the place where there was no evidence that anybody had ever tested them. So these were virgin targets. And that was the basis for the excitement in early 2017 when Adamira Minerals revealed what it had accomplished. But it turned out to be also a frustrating period because Mark Kalibaba became so paranoid about its land position because some of these targets weren't on land that they already owned. They were afraid that Kinross would wake up. Well, as it turns out, Kinross never really cared about it. It shut down its Kettle River mill when the Buckhorn mine ran out of ore, and that mill will sit there for another 5 years mothballed, and if there is no fresh use for it, it will end up being dismantled and sold as scrap, and that will be the end of whatever jobs that area had from mining. Unless, in the meantime, Adamira comes up with additional ore that could be fed into the Kettle River mill, or perhaps develops its own new standalone discovery. Now, the frustrating thing last year was that the Forest Service, in whose jurisdiction most of these targets sit, the individual that ended up being in charge of permitting the plan of operations for this newer drilling seemed to believe that the mandate was to protect the region from future mining activity and preserve it for clear-cut logging. And so the company ended up drilling some targets for which they did get permits, such as the Big Banana, which was so big it was too big to be true. And it turned out to be indeed a graphite conductor associated with some sort of unrecognized thrust fault in the region. So the company spent most of the year drilling in and around the old Overlook deposit, where at best the company might have additional ore feed to reawaken the Kettle River mill. But the big targets, such as SE1, those they just couldn't get a permit. They would be given one new hoop after the other to jump through. And this came to a head in early December. I was in Reno at the AME conference, a mining conference. Mark Kalibaba with Adamira was also there, and he was that one morning fuming about now he was supposed to do a goshawk survey because I assumed there were still some trees left in that area where they could possibly nest, everything else having been clear-cut logged away. And I mentioned to him, well, there's a huge Forest Service booth down the aisle there with lots of people there, and he just said, show me where it is. And we marched down there, and it turned out there were several geologists from the Washington division present, and when Mark explained the difficulties he had, they said, well, we weren't really aware that this was a problem, and that little bit of serendipity set the ball in motion. On January 29th, they announced that they had received a permit to drill this for the plan of operations for drilling several targets, including the SSE1. They started drilling on February 5th, and they announced on Thursday or Wednesday that they had intersected 120 meters of semi-massive to disseminated mineralization between sort of 60 and 180 meter depth. Now, this target is interesting because it's a strong mag EM coincident anomaly with a strike of about 250 meters. These deposits, replacement style, skarn-related deposits in this region, tend to have good EM signatures, conductivity from all the metallic sulfides in there. Now, most of the sulfides are like pyrite and pyrrhotite, but what was interesting about this target was very well correlated with it was a copper and arsenic anomaly, which of course are parts of these systems, and they're not the target metals. But there was also a gold anomaly in the soils from 18 to, with values of 18 to 350 parts per billion. So now this target is not huge at 250 meter strike, but these types of systems can plunge. So if it goes down 500,000 meters, and depending on the thickness, that could end up being a substantial amount of tonnage. So the company now has confirmed that the anomaly is not spurious. It has the evidence of a silicification in it, meaning the system was very well pumped, probably multiple times. The sulfides range from semi-massive to disseminated. They have sent away for rush assays. With this type of system, you cannot tell what the gold is. The visuals are completely opaque. The gold will be in with the sulfides, and so we have to wait several weeks to find out what this is all about. Now, should the market be excited? Is it justified? Well, if you do a little bit of a trigonometry, you can see that this system, if it's plunging vertically, has a true width of 69 meters. How can you tell? Well, they drilled a hole from the west perpendicular to the target at a 55-degree angle. So if you remember your high school geometry, you can figure that out. So if this system is 70 meters thick as a true width, and it's 250 meters long and goes down for 500 meters and has a specific gravity of 3, you're talking about a tonnage footprint of 25 to 30 million tons. Now, not all of that's going to be ore-grade mineralization, but the goal here is a gold deposit of 5 to 10 grams per ton, which can be underground mined, because you're not going to get away with mining anything open pit in Washington. We're not there yet. Trump is trying to completely eliminate opposition to any development, but we're not there yet. So that would require only tonnage footprint of 5 to 10 million tons. So this thing is potentially a significant discovery. It all depends on the gold grade. They have got a second hole underway that's been spotted so that they can determine whether this body is dipping towards the west or to the east. If it's dipping to the west, then the true width would even be thicker. If it's dipping to the east, well, then it will be narrower. You cannot tell from the geophysics what exactly it does at depth. So the next bit of news will be what is the likely true width of this interval, and then in maybe 3 to 4 weeks, we finally get the gold grades to tell us how does gold behave in this system. Do we have a discovery that deserves delineation drilling going forward?
We'll have more Discovery Watch with John Kaiser right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, NV Gold published final drill results from its Across the Valley project in Nevada on Tuesday, and the stock barely traded. Is the hope for a 20 million ounce Twin Creek deposit across the valley still alive?
Well, usually when a company publishes results from a drilling program, you either have the stock start to rise because there's evidence that a discovery is in the making, or you have the stock drop sharply because, it is not there what we thought would be there. In this case, what we're dealing with is we're drilling through basin gravel cover, and then there is another level of very young volcanic rocks, which are post the Carlin mineralization event, which runs from sort of 42 million to 25 million years ago. The volcanics are all from that sort of much younger period when sizable Carlin-style gold deposits did not form in this area. And they drilled 13 vertical RC holes in this area, and the reason they call it Across the Valley, it is because it's across the Kelly Creek Basin from the Twin Creeks mine, which is operated by Newmont. That's a 20 million ounce deposit that was found in the late 80s. And hope here was that there might be something similar based on Blagan stream anomalies that they collected in the hills, and sort of some theorizing by Quentin Henney about this is the area where he would have liked to drill when he had his evolving gold in the region. But this particular land package was part of a checkerboard that the ranchers owned, and they never did a deal with anybody until John Watson was able last year to finally get a deal where he had both the open land that he had staked and the checkerboard optioned from the ranchers. So this was basically an untested target. They had, but unfortunately, most of these holes, it took them, 250 meters to get into the older rocks that are going to host the mineralization, and all of them, except for one, was upper plate rocks, and the upper plate rocks are siltstones that have been thrust over the limestone, the so-called lower plate rocks, and they can host deposits. They tend to be structurally controlled, so narrower deposits. What you really want is the lower plate rocks, the carbonaceous limestones where they've been decalcified and where when the fluids come up, they get soaked up like a sponge, especially when they hit the tighter siltstones from the upper plate rocks above, and you can get some very rich deposits, and that's what the target here is. But only one hole, hole 6, intersected something that looks like lower plate rocks. And it didn't really have any meaningful gold values, but it did have the Carlin Pathfinder toxics in it. And so the company feels that based on anomalous values and anomalous gold values in some of these other holes, this system was the focus of fluid flow, but the target lower plate rocks are going to be deeper. They don't have any evidence of structural controls where there could be a lone tree type system hosted by the upper plate rocks. So they plan to return in February, drilling a deeper core hole in the vicinity of hole number 6 to get down and see what happens when you get into lower plate rock. So the project is not dead. Clearly, it's not going to be an open pittable scenario, because if you're dealing with 250 meters of gravel and then young volcanics before you start even hitting upper plate, you're going after a high-grade, lower plate, underground, mineable gold system. And the market, because it's not yet, bad news, it's not dead yet, it didn't sell off, but because we don't have evidence that they have something in their sights, clearly in their sights, it didn't go up. So the Across the Valley play is still alive, and we'll just have to wait and see if a deeper core hole reveals a lot more juiciness in the lower plate rocks.
Coming up, John Kaiser's closing remarks when Discovery Watch returns.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, Peregrine Diamonds announced an updated resource for its CH6 kimberlite at Chidliak. Will this reverse Eric Friedland's death by dilution strategy of ever cheaper financings?
Well, I haven't received a call from Eric Friedland yet saying that he's going back to work on Peregrine Diamonds and his Chidliak project. So I have a suspicion that we still have to live in fear that good fundamental results will result in punishment for Peregrine shareholders. On Thursday, they announced an updated resource for the CH6 pipes, which extends it down to a depth of 525 meters. And anything below 300 meters is going to have to be underground mined. Now, in 2016, they put out a PEA for a 10-year mine life of 2,000 tons per day, open pit operation that mined both the CH6 deposit and the lower grade CH7 deposit. Now, this new resource estimate for the CH6 alone, it's a 61% increase in the tonnage to 7.46 million tons, grading 2.41 carats per ton. That's 18 million carats, and that's 58% increase from that resource in the 2016 PEA. So this is a significant development, especially because the diamonds are high-value diamonds. In addition, they intersected kimberlite below the 300-meter level where the spacing wasn't deep dense enough to allow them to include it. But based on their estimates, there's about 1 to 2.4 million additional tons, which in this 43101 system gets classified as a target for future exploration. But based on their microdiamond assessment and the analysis of the kimberlite facies, they say it's the same stuff as what makes up the bulk of the deposit, which runs about 2 carats per ton. So one can say at the lower end, we now have a 20 million carat resource in CH6, both open pittable and underground mineable, and the pipe continues to be open at depth. Now, they used the $175 carat as a life of mine value in the deciding what would be the economic basis for publishing a resource estimate, and that would mean there's probably about $3.5 billion worth of diamonds in CH6. And there's another $500 million worth of diamonds in the CH7 pipe. So $4 billion global resource. But most importantly, if that $175 per carat number is reliable, this is $422 rock, which is very good for open pit mining, and it is good for underground mining. So the company is now working on updating its PEA to include underground mining, this additional portion of the CH6 pipe. And the original PEA, it looked like it could fly. They did use a questionable inflator for the diamond prices, which, given how poorly diamonds have done in the past few years, is questionable. It was also done by Mountain Province for its Gaucho Quay project, and that has turned out to be an absolute disaster with diamonds value coming in considerably less. But this deposit has very nice diamonds. I would say that Chidliak is the best undeveloped diamond project in Canada, and it's a shame that its valuation is so poor. Now, last summer, we got another deeply discounted 10-cent rights offering that raised $10 million. As of the end of this year, there's only $3 million working capital left. The company today happens to be its annual meeting, and it would be nice to be there to see how this, what their plans are for the future. They have started planning for building a DMS plant on the Chidliak site, which is really important. There was no real noise made about that. It's a sign that they want to go to feasibility, and not just feasibility, be in a position to process bulk samples from some of these other 71 pipes, several of which are potential future mine feed. So this is a project that really deserves to go forward, and you would think this stock should be trading a lot higher than it is. But it isn't. And an example is the attitude of management. I checked to see the annual meeting circular on CEDAR, but for some reason there is no annual meeting circular filed on CEDAR. Now, I've encountered this a lot in my data inputting work, but it's usually very incompetent juniors who manage to not file their AGM circular on CEDAR. And it's useful to see that because you can find out how much money, salaries the key officers are collecting. You can also see what the shareholdings are of the directors. And so it was very disappointing that a company which is not incompetent failed to file the AGM circular. And so one can just take this as another sign of a hostile attitude towards the minority shareholders. The company did file a compensation circular, which is interesting. It shows that the top 4 people are collecting $800,000 in salaries annually. And the part that really struck me is that Eric Friedland himself, the chairman, collects $228,000 a year. And I really question, for what? What exactly does he do? Now, Tom Peregrine, the CEO, and Herman Gruder, who's in charge of who's the diamond brains behind all this, they collect $400,000, and that salary is probably well earned because that's what's building the fundamentals of the company. The CFO gets also $200,000, and I kind of wonder if where the blame for the not filing the AGM circular lies. So it's very perplexing and troubling the way this company is handling itself. Feasibility study will cost another $50 million. Where's this money going to come from? Are they going to do a farm out to somebody else, give them 50% have them spend the $50 million? Well, over $60 million has already been spent on this project, and the valuation with like 440 million shares out, it's got a $60 million valuation for 100% interest, substantially less than the NPV suggested by the PEA. Maybe now that Dominion Diamond is private, they can sell the DO27 pipe, their 72% interest to them as future mill feed for Ekati. They put over $50 million into that project before the focus shifted to Chidliak. But in general, investors have to sit there and ask, okay, is the next step, given that they'll be out of money without doing too much more meaningful work by middle of the year, are we going to have another dilutionary rights offering, this time 500 million shares at 10 cents? The company's financials show that they spend absolutely nothing on promotion or marketing. So they are making no effort to have the market better value the company. So is the dilutionary death spiral strategy in reverse? Until Eric Friedland picks up the phone and starts calling people and saying this company is seriously undervalued, I would say investors should be careful because this company, whose fundamentals continue to improve and is the best diamond project out there, every time it gets better, it seems to just get worse for existing shareholders. And I'm an existing shareholder, and I guess you can see what my frustration is. this is a project that should have a much higher profile than it currently does.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.